Hello and welcome to MarketTamer.com. We spend a lot of time here looking at technical analysis, but today we'll focus on a fundamental measure and we'll concentrate specifically on this chart, which is coming in from the Federal Reserve Bank of St. Louis. And this is the St. Louis adjusted monetary base. If we take a look at how this curve has increased, it is absolutely shocking, of course, to see this spike here. But tracing back over time, what we've seen is over time the monetary base increased to about $900 billion, and that was up to 2007-2008 period. Just in the recent 6 to 12 months, we've seen this absolutely astonishing spike in the monetary base. And so you may be asking, well, what's the impact and what will be the consequences of that spike? And as I read the consequences, they are pretty singular. That is, we are going to see an increase in taxes, but that set of taxes can come in two forms. One is by decision, one is by default. And what I mean by that is the government can, by decision, choose to increase taxes on the people. We're certainly seeing some interesting moves by the government right now. For example, President Obama has recently looked to increase tax revenues from companies that were benefiting from reduced tax rates offshore. So places like the Netherlands and Ireland were benefiting from that, and Obama is trying to bring some of those tax revenues back onshore. So not only will the taxes be felt by the people, which obviously is the last thing that the government wants to do, but they are trying to discover and identify ways to benefit from bringing tax revenues back from offshore. So that's really the tax by decision approach. The tax by default approach is unpleasant also, and it is the case where if the money supply increases so dramatically that dollars are worth less and less, then obviously the approach will be to inflate the nation's way out of debt. And that historically has been tried before. It's never been particularly successful, and as a result, it's not the approach that we would like to see happen. Obviously, taxation by decision is preferable because it's more controlled. It's not certainly not accepted pleasantly by the people. None of us like it. None of us want it. But in the order of the two evils that we are presented with, certainly it would be preferable for the government to seize control of the decision rather than letting potentially the forex markets determine what will happen to the dollar, because ultimately if there are more dollars in supply, what we would find is that the dollar would be devalued, and the currency markets would certainly signify that through exchange rates, and that decline could become disorderly at some point, which is what we do not want. It's a remarkably strong economy, so we're certainly not seeing anything like that on the horizon in the short term, but you will certainly see very, very esteemed investors, even Warren Buffett, who I spoke about this morning, mentioning this possibility. So bottom line, we're going to focus here on the fundamentals, keep a close eye on them, and if you have any questions, please do feel free to jump into classes. We'll be more than happy to answer them at MarketTamer.com. Look forward to seeing you there.